Okay, folks, welcome to Market Wrap for the 23rd. Okay, so fellow member Muhammad brought up a comment earlier, and I want to address it again because I don't think I addressed it appropriately earlier. He said that we should be raising cash, and I took the question from a personal perspective and not from what he was offering up as in hindsight now as being a bit of advice that he was sharing for the group as a whole. So, in hindsight, I just wanted to go back and readdress Mohammed's comment. I agree. I agree that this market is weak and in all probability is going to get weaker. I think ultimately this Ukrainian issue is going to be a non-issue. I hope. I pray to God that it's going to be a non-issue. The more pressure we apply on the Russians, the greater the probability of them taking action. Why not? What else are we going to do? We can't attack them. And as a matter of fact, the president has ruled it out as recently as this afternoon. So why not take what they want to take if they're going to get punished for it anyway? Now, I mentioned this morning, I think it's going to be a nothing burger. I'm going to stand by that because I think ultimately this is all about politics and deflection. We have a lot of trouble here in this country and in the EU with regard to massive, massive amounts of debt, an economy which is slowing with inflation ripping through the roof. Now, it would be intellectually dishonest of me to say that all is bleak on the inflation front. I made a mention earlier in the Slack comment section this morning that I saw a report that average days at anchor outside the LA ports had dropped dramatically. That has not been validated as being accurate information, but if true, that would bode well for the supply chain loosening up, demand being met, prices potentially coming down. We'll acknowledge it when we see it, but right now, inflation is here. Those are the cards that we're dealt, and we're going to trade the market we're given. Now, from the outset, I'm going to say I remain very, very bearish on this market. I think we are going lower. If the Ukraine is resolved in some form or fashion, you're going to see a counter trend rally. Just like you saw the other day, you saw a counter trend rally, rip-roaring move higher. That's why I'm reluctant to get net short of this market at current, because with one headline, we could have our faces ripped off. I did shop around to see whether or not there were any good naked calls to be sold on ETFs or mega cap names. The calls have no value. I mean, it's just not worth putting on the risk. So the game plan is simple. Sit with the shorts that we have and sit with a big pile of cash and look for bargains. I'm going to go over a few that hit our monitor this evening. So stick around till the end. All right, let's begin with the bond market. This is the bond yield, and it was up today. Not really what you want to see when the markets are selling off and growth is getting killed. So this is not going to help the situation any. Bond prices barely holding on to support. This is probably just a counter trend rally, and we're probably going to break lower. Volume was light. Tips, they tried to take them down. They reversed to close up. Strong day. This is healing. How do we know? RSI, higher lows, higher highs. Same deal here on the Stokes. Price action being validated. Volume horrible, though, I will say that. The dollar, I've been warning about this. Beware. Last week we broke out, or we did a retest, one of the two. Yeah, we retested last week. And today, reversal bar off of support. We're going up higher here. So I didn't go adding more to our gold mining stocks, silver stocks, despite the fact that they have momentum. Why? The primary reason during this snapshot in time, the reason why they're moving up higher, along with the US dollar, is the Ukraine. I think we would have had a much more significant pullback on those names with the rising US dollar and Ukraine not in the headlines. But again, this is the market that we're given to trade. Let's recognize why things are moving up and think out, play a little bit of chess, think out what happens if Ukraine is no longer a pawn in the game and that pawn is taken off the chessboard. Well, certain sectors are going to correct and certain sectors are going to rally. The VIX, very strong day. I mean, yesterday I said that this appeared to be topping action, and yeah, we put in a new daily low. So to a certain extent, I was correct, but ultimately in the end, bullish key reversal bar. We closed above 30, which is very significant. But the adage I want to remind everybody about is that when the VIX is high, you got to buy certain stocks, not certain sectors right now, not certain ETFs. I think many of them are going lower, but there are certain stocks that we like. And if they do knock this market for a loop tomorrow morning, which I think that they probably will, we will be buyers because the game plan has been keep cash, get ready, short when you can. And if we have a big down morning tomorrow, we may just see a short covering Friday. The Dow transports. This is one of those charts where I talk about constantly as being the canary in the coal mine for the rest of the markets. What did we do today? We took out the lows of January, and not by a little bit, significantly, measurably. Volume was slightly below average. Stokes are weak. Remember, I drew this line, early last week, the week before, warning of a potential lower high. Look at this head and shoulders setup. So it looks as though we're going lower here. And as I warned this morning, if I'm wrong and they don't knock this market for a loop in the futures market tomorrow morning, and if they gap it up higher, just as I warned this morning, that's not the way these corrections end. They end with a bloodbath in the morning and a bullish key reversal bar by the end of the day. We're not there yet. And today, certainly, it was obvious from the outset it was not going to be. And for those members that are not in the Slack forum, this is what I'm referencing right here. Equity futures are up, but this is not the way corrections end. We should bet on a fade either today or later this week. Corrections are usually ended by capitulation day, meaning a down morning and a bullish close above support. That messaging remains consistent. And we did book profits on PANW. That's short today. So that's like a 94% profit. All right, the S&P 500. Daily chart. A clear break of support. We're probably going to take out the January lows tomorrow. Ultimately, we're probably going to end up down here at around 4, probably going to overshoot, but around 409 on a closing basis on the S&P 500. What do I mean by a closing basis? Well, if we overshoot and trade down below this 409 mark, yet we rally back to close back above support, well, that's a close above support on a closing basis, right? So that's what we want. That will imply that you have buyers of like mind down here willing to bid the market up. But folks, the macro picture is here. We have a head and shoulders setup, and it's all over the place on the trip Qs, on the Dow Jones, the NASDAQ comp, S&P 500, left shoulder, head, right shoulder, neckline broken. So this is probably going to proceed lower. The Dow Jones daily chart, critical support was broken today. This support level has been defended for quite a while now. Now, this is now broken. We have broken down below the lows of June. I want to take a quick peek at the weekly chart. Yeah, we're really breaking here. So much so that if on Friday we don't get a significant rally to recapture the support level, I'm probably going to buy put options on some of these sectors and put that on as a hedge. This is a very bad chart. The triple Qs. Here's the head and shoulders setup. Left shoulder, head, right shoulder. We've talked about this. Neckline's broken. We're going significantly lower here. I think we could hit at a bare minimum 314, 315. If that fails, we're going down to 310. Small caps down 1.87%. Now, a lot of people make a mistake in technical analysis, especially new folks, and I'm included in this. It took me a long time not to try to front run a double bottom setup. What does that mean? Well, many times during a bull run, you get a pullback, you get a rally, then another pullback that'll create your W formation or a double bottom setup, and you buy that pullback. Now, if you're in a bull market and you stay small on that entry and you add more on strength, well, you could do well. But we're not in a bull market. I know people are going to say you need to be down 20%, blah, blah, blah. This is a bear market. This is a heavy-duty correction. You need to have a bear market mindset. And in a bear market, the last thing we want to do is hope when we should fear. So front-running this W formation right now would be saying, okay, I refuse to believe, and I'm using that word refuse purposely because we get into our own heads at times, especially if this setup has worked for us a bunch of times in the past during a bull market. It's not going to work in a bear market. You try to anticipate a bottom rather than waiting for this support level to get tested and then get a breakout to serve to validate that, yes, this is in fact a W formation. People want to get in at the cheapest possible price. That is stinking thinking. That will cause you to go broke in this market. And add to that, once we do break 188 on the IWM, I should say when and if we break below 188, well, you're going to see all sorts of computerized selling forcing it down because now it's broken a key support level and now we're going a lot lower because now you have the computers taking out stops. Trust me, there are mountains upon mountains of stop loss orders right underneath the support level at 188.09 on the IWM. Once this breaks, they're all going to fire off. And guess what? The computers know exactly where those orders are. Stokes is still very, very weak. The banks, thank God we stopped out of the banks when we did. I see zero reason to get back involved with them yet. Volume rose today, but still slightly below average. The XLK, wow, we're right there. 146.24, look at the head and shoulder setup. Left shoulder, head, right shoulder on the XLK. Folks, I think they're going to break this market tomorrow morning really, really hard. Look at the volume. Let's take a look at the volume into the close. 5-minute chart. Not horrible. Last 5 minutes was pretty peaceful. Consumer discretionaries, daily chart. Wow. We've been speaking about the discretionaries as recently as last night. The more inflation heats up, the greater the pressure on the discretionary names because people are spending money, not at Starbucks, but at the supermarket and the gas station. A huge break here on volume, no less. Energy. Energy, I'm getting the feel that we have a short-term peak here. Stokes are now down below 50. Rallies tend to fade when that occurs. We closed up today, but on light volume. Let's take a quick peek at a weekly chart. I'm not ready to make the call that energy is done here, but it's not looking great on a short-term basis. Emerging markets. Remember, the dollar is strong. It appears as though it wants to go higher. Now is not the time for emerging markets. Avoid, avoid, avoid. Gold. Another up day, but really not a spectacular day. Not as a spectacular day as you might imagine with inflation in the news, Ukraine. I think that we're a little bit extended here. Volume was very light. Very, very light. So this could be gold traders out there saying, you know what, I see light at the end of the tunnel on this Ukraine situation. The one bullish thing is that they did try to take it down earlier in the day, much like the past 2 days, 3 days, and it was bid back up. I would love to see a nasty sell-off here. only because I'm bullish and I want to buy more gold mining stocks. We're flirting with a breakout, a major league breakout on a weekly time frame, folks. Look at this W formation. Higher lows on Stokes, love it. Volume is pretty low. Now, granted, it's an abbreviated week, but you take a look at the daily chart today, and volume was not good. Yesterday was great. All right, 2 positions. GDXJ, our gold mining trade, up nearly 3% on the day. Good stuff. Flirting with the 200-day moving average. Love it. Rising moving averages. Unlike the NASDAQ, S&P 500, where you're seeing negative crossovers. I had my dad call me today, asked me, what the heck is all this talk about death cross? I'm adjusting my audio here. I see that it's off. So if you're wondering, hey, why does he sound different? I adjusted my audio because my gain was off. Okay, so GDXJ looking good, up on volume. This is where the money's flowing, folks. Nugget, our other gold mining play, up over 3 1/3% on the day. A little bit of topping action here. How is volume? Just below average. Silver, the monster today. A clean breakout here. Once we break above 3091, you're probably gonna see a lot of program buying, because this is your W formation. That's the apex of that triangle formation, or the pivot point, I should say. RSI strong. How is volume? Volume has been great. The silver miners daily chart, good day. We closed slightly off the highs of the session. This $13 per share mark, a little bit of resistance, but I'm loving the volume. Gold money closed down on the day. Shocking. So I think we're setting up for a continuation move up higher on gold money. Cal-Maine Foods, our little egg company that could, up over 2 1/3%. Volume is trending lower, so just be careful. This is a commodity play, right? So inflation is in the air, but once there's a glimmer that inflation may be subsiding, you're going to see the air come out of this stock and gold, etc., in a heartbeat. I think we still have a lot more room to run here, but I just wouldn't go chasing the shares. Wait for a nice pullback and a consolidation like you had here or back here. This is how volatile this is. You see these sell-offs constantly. PayPal. All right, so PayPal, we closed out the day with RSI 19.97. We finally broke that 20 mark. Stokes continue to be flatline. So we're going to get a vicious counter trend rally here, but unfortunately, not before we go lower. We had an outside reversal bar today. We have resistance up at 105.50. Volume is still coming in higher. What I do want to point out is ADX red double top. I drew this line a few days ago, and sure enough, we are rolling over now. MACD histogram, losing that downside momentum. So while this is an ugly chart, and it's probably going lower, we're a lot closer to the end of the sell-off, at least in a short-term time frame, than what you might imagine. And when you take a look at PayPal weekly time frame, RSI 14.31, which is bananas. Now, my guess is that we're going to see a 90 handle before all is said and done on PayPal. But if they sell this market off hard, you could bet your bottom dollar I'm going to be in there and we're going to be nibbling. But ultimately, what we're going to be looking for before we get very aggressive is a bullish key reversal bar. This is a bullish key reversal bar right here. You open down, you close up. Another one right here, bullish key reversal bar. Another one here, bullish key reversal bar. We want to see that bullish key reversal bar, but on volume to the upside. Ocean Power Technologies. I've been purposely ignoring this because it just hasn't performed well. But RSI has been doing a stealth rally despite the fact that price action has been doing nothing except for today, We broke out today. So dare I say, I may be adding more here on OPTT. All right, watch stocks. I can't go to NVIDIA. We're going to skip NVIDIA. 3M. Daily RSI down below 20. Why am I on a monthly chart then? Because we want to know exactly where our support levels are. 140, 138 to 140. We're not even going to think about touching this stock until we see those support levels tested. If it fails, we're coming down here to 120. And it may seem far away and probably improbable. Maybe you're right. But I've seen a lot worse. So we could easily, from my experience, see this 120 mark. And God forbid we close down below 106.50. I mean, that's a major double top and a confirmation breakdown. That's a major breakdown on this stock. FedEx. Monthly chart. RSI trading down below the 20 mark. At current, on a monthly time frame, we are down below critical support. It was support back here, 2017 through 2018, and then it broke, rallied back, then it became support in October of 20, pulled back, was retested in September of 2021. Now we're trading back down below it. Lower high, and now lower lows. The prior low is 215.68. We closed at 214.84. So any trade here, and this includes 3M, and for that matter, PayPal, all we're looking to do here is trade a short squeeze, meaning we want to get in, enjoy the short covering rally higher, and then we want to get out. Go back to cash, look at the overall market and say, okay, is it time to lean into the short side on the overall market? Do we have a counter trend rally in a bunch of stocks that are now setting up nicely to be shorted? Because there are many people out there thinking, you know what, this correction, they're looking at the daily chart, they're saying this correction looks pretty much done and over. How much further do we go? Well, if you go back to the monthly chart and you look back, sorry about that, and you look back in time, we can go a lot lower. So don't underestimate the power of the market to take out prior lows in a heartbeat. Just when you think the market can't go lower, it takes out lows. It just flushes everybody out, and then that's your opportunity. Okay, folks, a bit long-winded tonight, but I really wanted to cover a bunch of topics. The primary one being, this is not a market where we want to catch a falling knife, and that's exactly what it is. Just when you think, again, a stock can't go lower. I know we were talking a bit about LABU today. I love LABU. Let's take a quick look at it. Monthly chart, absolutely annihilated. How much lower can it go? Well, we have a bearish reversal bar on the month. We can go into the single digits, folks. Weekly chart. Look at this break today. I should say this week. And we're flirting with a break below the January lows. Daily chart. Well, the daily chart shows that we did take out the lows of January. The weekly chart does not say that. Weird. And we were down on volume. So in all probability, we're going to break. We don't want to read into this and say, okay, we have a double bottom setup and we want to go buying it. No, 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 no. No, this is a weak market. It is a heavy-duty correction, and it's just beginning. So let this correct, and we will certainly be involved with it. With that, folks, everybody have a great night, and I will talk to you tomorrow. Be well.